The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Thursday, the 9th of September. And yes, there's a little bit of difficulties in the Tiger TV. We're trying to repair that. But we've got the Tiger Den working, and we're doing the show. So the Dow is down 141 at 46,460. As you can see, the 9-period moving average is still very much above the 14-period moving average, and that's really important. The MACD's turned negative. The relative strength is negative. Stochastic's negative at 67%. The on-balance volumes pulled back from the high that was made at 47,049 on the 3rd of October. And it's a bit of a struggle, yeah, but we don't have the enveloping bad news that really tanks the market, where the market, we're down now 123, but it should be down 423 if there was really bad news that was going to impact this market, and it should follow through with really bad news tomorrow. We don't have that. So this I'm calling just at the moment a technical breather, and that's all it is. We'll see if it changes course. Anything can happen at this level. All-time highs. S&P all-time high today goes to 6764.58. All-time high, trading now down 8 a little bit, trying to come back. Just the technicals, the 9's over the 14, that's great. MACD is still good. On about the relative strength is pulling back just a little bit. Stochastic's fabulous at 88%. The on-balance volume is good. Look at the QQQ. 1, 2, 3. There we go. 1, 2, 3. And then we go QQQ. All-time high yesterday, 611.75. Today's high is just a tad under that, and now it's at minus 120 at 610.20. Struggling a little bit, but look at that. The 9's over, the price is way over the 9. The 9 is over the 14-period moving average. MACD is good. The relative strength is not great, but it's good. The stochastic's fabulous at 87%. The on-balance volume, on-balance volume is still very good. Look at that weekly chart, still rising with small candles. I like that at the moment. We'll see if that's going to last through Friday. I am quite cautious, actually. We've been very selective in any new positions we're putting on. We've taken off, and I'll talk about it in a moment when we get to it. 245.78 on the IWM, down 90 cents at and the 248.48 high of 4 sessions ago. Well, that's still the high, but look at that weekly chart out, steady and nice, moving, nice candles, just relatively small candles, and each one making a higher high and higher low. We'll see if that's going to hold. I do want to look at the SMHs. Are they starting to pull back now? Yes, down 58 cents, down 74 cents, 3045.33. So this is telling me that on a very short-term basis, we're starting to see some inklings of profit taking. That's all we can talk about right now. Profit taking becomes a lot more if the all-time high of 348.23 isn't hit in the next 2 days by Friday's close. And in fact, if we start to go below the midpoint of this candle from yesterday, go into 341, that'll be a problem on the short term. Let's go to the, I want to, did that. Yes, so I have to go to gold. Gold is down 26 at 4,043. Yesterday was an all-time high of 4,081.00. Now, for subscribers to my opening call, we've had some really fabulous gains. We've had PHYS. We did have the GDX, and we moved over to the PHYS, which is spot physical gold units. All-time high. We had a 50% profit in that. I took the last of the little bit that we want to take off. We're keeping a small core position, but we have taken today. We took off, and I said to subscribers, this will probably be the last we take off, and now we have to wait for a pretty decent pullback. With peace talks out and peace possibly happening, maybe gold has a little bit of a breather, even though there's geopolitical aspects to this. That's the way I'm looking at it. Look at silver. Silver's all-time high today, spikes to 49.96. Pulling back from that, it's down 33 cents right now. Here again, we took our CDE, which is core mining, CDE, which we got at 7.92. today we took the fine little smidge off to make sure that we've got a small call position that we're going to keep now, and we're going to try to add to that on any sharp pullback. But from 792 to 21 to the 21s where we took something off, and today's high is 21.80 so far. I just think it's a prudent thing to do. It's been a spectacular move. All the reasons that you would think that are current to be able to have this as a geopolitical, not an internal, but a geopolitical issue. I think it's reasonable to think that there should be some kind of a pullback. How deep it is, we just don't know. But of course, with the budget not being funded, this is an issue, and it's going to become a bigger issue, I think. And that's another reason why I'm saying, let's just be a little cautious here. In the meantime, back at the ranch, what do we have? We have high-grade copper. High-grade copper has made a new recovery high today, went to 525. It's up 0.8 at 5.17, done really well. I think this is still a place where there could be more buying to come because of other aspects, and that's to do with minerals, etc. Talking about minerals, I had a question about HBM, something I'd never seen it before. HBM is Hudbay Minerals Inc., leg D in the monthly chart, leg D in the weekly chart, and I can have a different count, but I'm calling this a leg C. It could be an alternate count. There could be an instant restart A, B, C, D, E. Could be an E/C, but it did hit a recovery. Oh, is that an all-time? I believe that's an all-time high. Hudbay. Yeah, I don't know. I'm going to squeeze this a little bit. Squeeze. No, it's not an all-time high. The all-time, at least the last major high was back in 2010. I think it was December at 18.98. And here we are in the 17th. So we've almost gotten back to 14 years ago. Unbelievable. In the interim, it's been down to the ones, right? All right. So I'm saying that in this particular chart, to me, it looks a little bit overbought in the sense that it's a very strong monthly, very strong weekly, even a very strong daily. But just that, you see that on balance volume, very, very overbought. But the stochastic still at 88%. The MACD is still expanding. The relative strength is still strong. So what I said is, if you want an ideal position to enter, I'd go into the 15s. But there's another way to do it, and that's just say, I want to get my foot in the door. I don't mind if the position that I get in now pulls back, a good percentage, but I'd like to get in to get a feel. And therefore, I would say, if you want, just tiptoe in, just tiptoe in at 17.15. But if you ask me my opinion is wait for a pullback below yesterday's big candle with a low of 16.03. So I'm just saying, ideally, just start looking at the position in the 15s. In fact, give me a yell and we'll look at it together. Oh, copper right now. I think I did. Didn't I do copper? Yeah. So copper is in a very strong leg G/C. And the strong leg B. You know what? It's worth taking a little. Because this is one of the minerals that's really important to batteries and many other things. I'll come back and I'll do copper. Meantime, Dow's down. Now it's 98 and the S&P is down 9. I'll be right back. Basil Chapman, Tiger.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
I've also said I've been looking at copper. I got a little distracted there. So let me just do this for the moment. I'm going to say that there's nothing technically wrong with copper. The copper chart is still very strong. Look, the price is over the green 9-period moving average. The green's way above the black 14-period moving average. That to me is very positive. The MACD is still expanding. The relative strength, the little gray line there, is starting to rise. The stochastics at 89%, and the unbalanced volume is a little bit overbought, but still very good. So I like it very much. So what I would do is I would say on a shorter term, 4.94 on the continuous contract is really very important to hold as support. Because if it does that, then all of a sudden that 494, the black 14-period moving average, that becomes the next support. Right now, look, if you go to SCCO, and this is, I typed it in the wrong place. Give me 1 second. I have to fix this up. I always do that. Right there. Okay, we're back. I just changed something very important. Okay, if I go to SCCO, make sure that I'm clicking on this. There it is. That's Southern Copper. Look, SCCO, red candle today, but it went to a leg D to I can't remember now if this is an all-time high or not. It made a peak G, so this has to be a brand new leg B in the monthly chart. So looking out, copper is very strong. Oh, look at that. Had this inside track repellent zone, finally got there in the 127 area in May of last year, and takes a dive, and it goes all the way down to the 73.37 low of April of this year, and now it's had a spectacular move. I've got this as a leg B in the monthly chart. That should still go to a higher C and then a D. So that's still very positive. It is in a D already in the weekly, and that just said to me, okay, monitor this closely. But look at this. The on-balance volume, the blue line, is very overbought. But the stochastics at 91%. That's great. The price is way over the 9, and the 9's way over the 14. And in the big picture, you've got the 200-period exponential moving average rising. The MACD is huge. Look at the mouth of this porpoise right there. Look at that. and the relative strength is rising. So this is very good. On a very short-term basis, I've got for subscribers, we've got a bid in for one of the positions in the copper sector on a pullback. I need a pullback, and then I want in because I think looking out, it's looking very good. Shorter term, I would just say SCCO, but let's go to FCX, which is Freeport McMurray, who I had a question about a week or two ago, who said, hey, is this opportunity? Of course, you never want to talk about a mining accident with people killed as an opportunity, but in the stock market, you just have no choice. If something happens to drop sharply and you still think that the company is very good, you have to look at it and say yes. And I said, yeah, it is an opportunity, but I would start a position, yeah, and if it goes a little higher, then I would add. And that was I think it was actually in the 38 to maybe 40 area, and here it is, hits 44.78. FCX is the symbol, pulls back, it's up 56 right now. It's pulling back from the high of the day. This is still just a huge leg A in a V-shaped pattern. So I would just say, yeah, I'm anticipating that copper looking out is going to do well, but shorter term, it might be a little bit over. I can't put it in the same category as the gold. Those two metals, gold and silver, I can't put it in the same category, but I can put it in the category of minerals. And hey, have a look at this. Talk about minerals. Palladium. Look at that, leg E. It's on an all-time high. I don't think I can go back far. I used to be able to, but not anymore. I don't have the data for it, but I can go back to 2015, where platinum, did I say palladium? I mean platinum. I meant platinum. Platinum went to 1,740 in July of 2014. Here it is 11 years later, and after going all the way down to 800, what was that? 709.80 back in March of 2020. Here it is, whoosh, a bouncy, and then all of a sudden it breaks out in this cup formation and is going right back in leg B. So yeah, and let's see what palladium, P-A-L-L. Yeah, palladium is P-A-L-L. Aberdeen Palladium, yeah, also doing a very nice rally right now. Let's just see it in the shorter term. Yeah, leg D. Gee, how many Ds do you get? This is a D as well in the daily, and it's a C in the weekly, so it's still got higher to go, and a C in the monthly. So all I'm saying is that at this particular point, I'm anticipating that there's a catalyst at least for a digestive phase in the gold. Oh, now it's down 43. I think that was very timely taking that off. We got in beautifully, and I'm not saying we got out, but we got out quite a bit at most recent highs. That's today or yesterday, and I'm not upset about that. It can go higher. I don't really care. We've had a huge run. I'm just anticipating at some point gold and silver will give a much better entry point. Okay, done with that. Next question came in. If I can just get the yeah, I did that. Question came in about FCX. Let me just do that again to say, where would a new entry be if I haven't got? Where would an entry be if I didn't get in earlier on? Now I think you have to wait. The 200-period moving average is at 41.58. It's at 43.46. Just give it. You need another day. I mean, we haven't even. I mean, it's still up 60 cents on the day, FCX. So give it Monday or Tuesday. If by Monday or Tuesday, instead of being at 45.80 or higher, there's your trend line that it has to break above. It, in fact, is below this candle, in this candle right here with a low of 41.87 and a high of 43.03. That's the candle of just yesterday. Then you've got to have a little bit of patience. And that's what I'm anticipating. Let's look at it again tomorrow and Monday to see what to do. As I say, we're waiting for a pullback in copper at a particular position. Now, did I do it? This is Bitcoin. Did I type it in the wrong place? I probably did. Let me get back here. Bitcoin. So something that I need to just show, but Bitcoin is down at 1650 at 122,420. I think that the high that was made 4 sessions ago at 127,240. Let me just type that in. 127,240. I think just for the short term, because of the Chapwave inside track at a D, in the weekly chart is just saying anticipate some kind of a digestive moment right here, 119,600. That's kind of your key support in the very short term. If it closes today or tomorrow above 125,750, I think it goes quickly to test the high that was made at 127,240. Okay, that's the way I'm looking at it right now. It's had a spectacular, a very short-term rally in about a week and a half. It's gone from the recent lows to the highs. ETH, yeah, sure. ETH is trading. Now, I think this is the clue to me was yesterday I was saying that the 45.79 high of August pulling back to the 36 level and then skyrocketing in a week and a half to just under that 45.79 level. This says to me you've got a consolidation coming up in ETH. If it takes 38 expected, takes out 38 support, expect 36 to be hit. If it goes above 45.80, that's really good action. I'm anticipating a digestive phase. I'll be back. Basil Chapman, Technicians Hour. Dow's down 181. S&P's down 16. Yeah, I think we're having a little bit of a digestive day today, and might go into tomorrow. The semis are still doing well.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Folks, we're back. Yeah, so I think that the way that the market is unfolding right now is exactly what I said. It was one of the perfect ways that it could do some kind of a mini digestive phase. Because look, the VIX index is only up 50 cents at 16.80. It's kind of disbelief. People are still buying some of the favorites. I can tell because some of our positions, which have been favorites, have seen buying. But we've taken a little bit extra off here, and I'm just trying to keep the core position as much as we can. I'm anticipating that there will be some. Look at GE. Here's a good hint. GE turning around. So what I was going to say, look at that. And now what you've got, had a question in the den about CGC, which is Canopy Growth Cannabis. See, all of a sudden you've got money saying, hey, let's find a new area. So MJ, we don't have this, but I'm looking at it. MJ is the Alternative Harvest ETF Cannabis, trading from the 30s just a week and a half ago, 2 weeks ago, into the 41 area. I think that money's just trying to find a different home, and that's just telling me that as long as the VIX index is in denial, if we can pull back more going into Monday, just quietly like this is, as if, we just, we've been up so much, just a little bit of a breather, and then slowly arch over, and that's really what I'm looking at. As I said, let me just go back there. Look, GE, all-time high. We still have the GE from the 198 area, and here is a 278, 297, and turning around in the dreaded H pattern. Hasn't done it yet. 9 still strongly over the 14, but look at the MACD, look at the relative strength, look at the stochastic, look at the on-balance volume. It's just suggesting that you've got to be a little bit careful, and it's a peak D in the daily, in the weekly chart, leg E in the monthly, or actually it's probably an A, I'm calling it E for now. I'm just thinking that look at the SMHs. Very quietly, all-time high, 4 sessions ago, 348.23. Nothing to see here. Everything looks fantastic. Nothing. We won't get a pullback until this sector, the semis, really turn down and start to trade close under the 14-period moving average, which has support at 337 right now, and we're way up at 345 at this particular point. So it needs to be a slow, maybe there's a bounce. To get these 9-period moving average, let me just show you something. I'll take a moment to do this. Look, 9-period moving average, how important this is. Here we go. Look. To get a 9-period moving average, this is the E-mini, this is the EZ, this is the December. Look at this. Since I can't believe this. And that's the reason why we're still long the Dow. Since the 25th of April, where the 9-period moving average went, 28th of April, when the 9-period moving average crossed positive, to this minute, not once has that green line even broken below the black to go pink. It's still green. So each time you thought, oh, this is it, oh, this is it, oh, this is it. No. But look at the sequence of lower lows that go underneath the 14-period moving average. That implies that if this is going to become a negative, you've got to see something like the E-mini go to 66.50. This is 67.77. No, I'm making it 66.80. 66.80 or lower to get that green line to actually close underneath the black line, the pink, to go pink. I mean, look at that. And this is, yes, the SMHs, look at this. To get that green line to go pink, look what you had to do. You had to go, in this particular instance, you had to go from 300.78 back in on the 20, daily chart, 28th of August, all the way, so what did I say? 300.78, let's call it 301, to 281, 10% before it went pink. So to get 10%, yeah, you have to have quite a bit to go down. So I'm just saying I'm being very cautious here, but there's a lot to go to get this. So it might just be a couple of days of a pullback. But in the meantime, back at the ranch, I'm becoming much more cautious. We did have a start of a short position in the Dow yesterday. It just got taken out. Actually, now it's doing very nicely. But that was the hint to say, yeah, just on a short-term basis, there's a pullback that's likely coming, and we go. So let's go back to CGC. So CGC, 1, 2, 3, and thank you, Nitram in the den. Yeah, this is a leg D. Now, let me just do this. It's not Friday, but I'll do a technical study. So the starting point is this low that was made right here. That's the low in July the 29th. July the 29th, it goes to 1.01. So let's just put that in. All right, there we go, 1.01. Don't have time for the date, just put 1.01. Okay, and then it starts. Sorry, I made a mistake. The arrow is there. That was 1.01. And then there was a retest. It goes to 1.01 on the 29th. And then on the 1st of August, it goes to 1.01. So that's like a retest. That's good. And then it goes, so that becomes an A because that 101 wasn't taken out. So that is A. But if that was the low, I couldn't use that as the starting point. I'd have to wait for a trough, and then I can use the count. So this is A. That's B. Under it, there's no A. It goes to a C. Then under it, it goes peak A, peak B, gray A, gray B, because it's under it. But wait a minute. It goes gray C, and then it goes to a D. D underneath the previous C. It says, I've got to be a little careful there. But look at the way the MACD, the retro strength, the stochastics improving to 51%. On balance volumes a tad overbought, but doing very well. But the weekly chart has started to improve a lot. So I think, yes, cannabis growth, cannabis sector. I'm just saying to you, I think that this is in play. A little bit difficult. It's a little difficult. But in terms of the percentage, I mean, look, it's at 1.70 right now. The low today is 1.57. Just 157 to 170 is already almost an 8% rally. So today we've got 11.76% rally from yesterday's close. I'm just saying, I think it's in play. So let's look at this. What was the other one? I usually look at CGC. So which I used to have all the names down. I want to go to STZ because this is the big daddy. This is the biggie. I don't know about daddy anymore. Constellation Brands, liquor, cannabis. So yeah, it made a low. Just most recently, the low was, let's just go right there, 131.20 on the 23rd of September. So it's gone to peak APP. Yes, for those of you who are looking at like the leader of a particular sector, I'd put STZ, Constellation Brands, and it's gone to peak APP, and I think that it's looking much, much better at 144.91. I like it. I'll be back in a moment. Basil, Chapman, Dow's down almost 200, S&P's down 24.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the fund involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so we covered quite a lot. One of the things that is very important is so the GDX is down quite sharp. It did not take out the high of 4 sessions ago, which was 79.49. Let me just change that, 79.49. So let me just recap that. I'm looking at just the chances of gold, silver, just pulling back here. I think they've made at least a short-term top. That's the way I'm treating it for subscribers. We're taking our really good gains. And I, as far as I'm concerned, I think it's really important to at least get a feel for what the geopolitical aspect is. So there could be some peace. The Dow is down the gold is down quite sharply. What is it down? It's now down 43. Yeah, it's not so bad. Yesterday was a huge move up. You can never tell, right? So that's just the way I'm looking at it. In other words, I said we're not going to be putting any money to work in gold. We're going to take a little bit more, keep core positions from our lows that were taken, that were entered way ago, and just have patience now. I spoke about high-grade copper that still has some upside potential. It's a different category to the other minerals. It's in the rare, it kind of fits into the rare category. It isn't that rare as some of the real rare ones, but it's there. That's number one. Number two, I just wanted to look at Home Depot. I wanted to show you something. So look at this. Home Depot had the spectacular move. We didn't quite understand with yields going up why it should go all the way to the 420s. Well, now it's at the 381 under the 200-period exponential moving average. That's Home Depot. But look at Toll Brothers. TOL. Look at this. Toll Brothers also had a huge pullback from the high. It was made just under the 150 level in September. Now it's at 128. And it's a peak D in the daily, peak F in the weekly, almost like I wouldn't say dreaded H in the monthly, but certainly a problem turning down. Look at Lennar. Lennar is also another builder, makes a high of 144.24 back in September, and now it's trading at 117, right on the 200-period moving average of the weekly. Look at Builder, BLDR. Builder's Resource went to 151.03, all-time high. Was up in the 218 area back in 2024. It makes the dreaded H, tumbles down to 100. like 102 or something, screens back up, peak A, peak B, peak C, peak D, peak E, wow, 151.03, bam, it goes down to 116, bounces, and now it's at 126. That to me is an issue. And all I can say is, let me just do this. No. Okay. I need to do that. I need to do a place order. Now, what I am looking at in the overall picture is that the yields aren't coming down like everybody thought. But they're not going up. They just kind of stuck. But there's a hint that the Fed could say something that just kind of irritates the market. I don't know. But what I'm looking at, there's a cumulative aspect to what we're looking at in terms of market vicissitude, things that can happen in the market that could irritate it for it to go down. Number one is there's the funding issue. That is a political issue that's just been hindered by both parties. One wants one thing, the other wants another. And as long as that becomes a stalemate, the longer it lasts, the more the market can start to treat it as if it was an irritant. Then you've got the aspect of the yields. We don't really know. So let's just go to the 10-year TNX.X. And that is trading at, the 10-year yield is trading at up 11 cents at 41.40. Look, it's in the low. It looks like it wants to arch over, but it hasn't. If I drew that rectangle, remember the rectangle I do, and we usually look at it the upside and on the downside, it can have the same thing, but just reversed. And that just says, yep, it looks like we're arching over, but we haven't really failed, even though the 9-period weekly, 9-period moving average is really negative, and the MACD is negative, the stochastic's negative. It hasn't been plunging. And that just says that there is still demand for the yields, meaning that they go a little higher. So as it stands at 41.40, 4.14, I would just say that until it starts to trade under 40 in the 39 or lower area, I've got to monitor this very closely and say, oh, wait a minute, what's happening with yields? They should be going down. They aren't going down. The market could worry. So if this becomes cumulative, I don't want to see the VIX index. And it's a pity that our video at this point for TFNN is had just a little problem there. Probably replay what we've got right now later on. But I'm just trying to show you that if this VIX index doesn't skyrocket to the 19s in the next day or so, but in fact there's a slow rollover, I prefer that. I want to see us come off the highs in the key indices, well off the highs before the VIX index even decides that it wants to trade in the 19s and then the 20s. That to me is the way you get a rollover, and that's the way you get the roll up in this flat base bowl formation. And you need to see the VIX index trade over 18.39, the 200-period moving average. And for a couple of months now, the majority of the trades have been underneath the yellow or orange 200-period exponential moving average. As soon as it starts to trade and hold in the 20s, then we've got something that is going to irritate the market. And the other thing is, I may as well just go to the SMHs. Down now $1.62 at 344.46. Still way up, looking fantastic. But there are hints to say, look, the stochastic finally has gone from the 90s to the 83 level, still very good. The on-balance volume is still very good. The relative strength weaker, making lower highs and lower lows. That's a little bit of a negative. But the MACD, the 9-period moving averages, the 9-period differential is way above the 26-period exponential moving average, the red line. I'm watching this very closely, but what did give me a hint that we could be getting to a little bit of a turn down is that the relative strength went overbought. It went red right there, And that usually says to me, monitor that closely, because in a short while, if that relative strength starts to go quite a bit below that level, that's the 80% level, you got to monitor that, because that's a good sign to say, not a good sign, it's a sign to say that there could be a bit of a turn down. So I'm just going through these step by step. In the meantime, back at the ranch, what we want to look at here is, so questions came in. Oh, I see there is a question there. Tesla, could I look at Tesla? Let's do that right now. TSLA had a spectacular move. It went all the way from the 214 April low to the most recent high of 470.75. Here's the dreaded H pattern. In other words, it looks like an H. I haven't. Oh, it's not there. Okay. So you come straight down, then you arch over at a peak A or a B, and you take out the left side low. If at any point in the next few sessions Tesla closes under 416.58, that's going to be a negative and say, could go a little bit lower. I'll be back in a moment. Dow's coming back a little bit down, 171. S&P's down 20. I'll be right back. Basil Chapman.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Yes, so let me just quickly, what are we looking at? Yeah, so within the context of what I'm looking at here, let's just use the SMHs, which have been, wherever the SMHs go, generally the market's going to go, right? So SMHs are still almost at an all-time high, just a couple of dollars away, down 96 cents. So if by not tomorrow's close, but by Tuesday, if we start to make all-time highs above 348.23, that is really good action. For whatever reason, if there's a sudden move below the halfway marker of this Mariposa candle from yesterday, no wicks, well, there was just a fractional wick, but I still call it a Mariposa candle, and it starts to trade under 342. So that's 3 points lower than where we are, 3 and a little bit. That's just going to say, okay, it might be rolling over, but that MACD is still very strong. The 9 is still very strong. So for this to become a real failure pattern, you've got to see something like the low of yesterday, which was at 336.42, not just pierced, but closed under. And that's going to take all of a good few days to do, if it's going to do that at all. So I'm using that just as a benchmark, and it's a way, probably as insurance. The Dow's been the weakest, so maybe the Dow, let me just go to the Dow for the moment. Here the Dow is at the low, not the low of the day. It hit the 14-period exponential moving average. It looks like it's one of the weaker ones. So I'm watching that very closely. So with that said, Robinhood is always a clue. Robinhood is down a little bit, down 2 at 148.79, made an all-time high of 153.06 on the 6th of October with 153 round number. If it can close above 153, that's going to be really, really important. I'm watching it closely. So have a great rest of the day. I believe Steve's out. I'll do the news. And check out my Opening Call Daily newsletter. And, hey, I'll see you tomorrow. We'll see what happens by the end of the day, if there can be a bounce that holds.